have that kind of attitude. The car's repossessed. Nobody believes in you. You've lost again and again and again. The lights are cut off, but you're still looking at your dream, reviewing it every day and say to yourself, it's not over until I win.
You need to start believing in yourself. You need to start believing that it's actually possible for you to succeed. No one else is going to believe it for you. And if you do not correct the image that you have in your mind, you will always go round in circles, you'll self-sabotage, and you'll be in the same place a year from now, 2 years from now, 3 years from now, or doing the break-even dance at best. So for those of you that don't know, recently we brought out something called AFT, which is Advanced Falcon Trader. And it really comes back to the message that I want to explain, which is mastering the basics. Now, in this episode, I'm going to be taking you through what is phase 2 of AFT, especially with all those questions that have been sent in. However, there's a reason as to why what is happening on the charts is happening. We've been predicting this for months. This is not a crystal ball, it's just understanding how to look at structure correctly. There's a reason why we've been anticipating this for the past few months, because Q4 historically is the most profitable quarter. Now, there's a reason for that. You just need to know what to look for. So let's just dive straight into the charts. Only a competent trader that has mastered the basics will be able to execute on this. We've had thousands of traders over the years in Falcon. Some have gone on to create really great returns. They've become full-time traders. They've ticked off their goals. Some of them have gone very, very close to succeeding, but thrown in a towel at the last minute. I get it, it happens. Sometimes you get frustrated, you're not where you want to be, and you give up. It happens in all types of strategies. Now, the reality is, what we do is simple, not easy. And that's just trading as a whole. It's not easy, but it is very, very simple once you know what to look for. Now, a lot of the times we get to around, I would say 70 to 80% of where we need to be. And what we do is that we delude ourselves into thinking, I know everything now, therefore I should be getting the results. And the reality is, these traders, they do know a lot. They understand the strategy, they can follow the analysis. It's not usually in the technicals. Yes, there's always a few technical tweaks they can make. It's normally in their execution, their ability to actually execute under pressure. So it moves more and swings towards mindset. But what you have to understand is that even with mindset, you still need to be technically skilled. And a lot of people think they're technically skilled, but there still is that extra layer to go. AFT is going to help with that so much. But again, if you don't know the basics, you're not going to be able to execute on this. So I just want to run you through a few positions to understand there's specific things that consistently happen, kind of mechanical in that sense, that what you're looking for, that really gives an edge for a lot of these trades. So I've taken 2 trades this week. I've taken a break even on Euro Sterling, and I have just got out of the dollar CAD position, and I'm just going to show you a few here. So dollar CAD, dollar yen, and dollar Swiss. And essentially what happens is this. What you're looking at is, let's say, something simple like a double top area, a value area that you're looking to sell, or a double bottom for a buy, whatever it is that you're looking for. What we're doing is that we're going granular and granular, but using the higher time frame all the way through. So when we get to the executional time frame, so when we get to the AFT part, we can execute on something very specific that happens regularly to be able to capitalize. And they tend to be turning points in the market. So then when you factor in a reasonably smaller stop, I'm not talking 2, 3 pips, 4 pips, 5 pips. I'm talking more towards 10 to 15. So it's still a relatively tight stop. You've not compromised your risk. You're still backed by the higher time frame, and you're able to extract these returns that you're looking for, but in a more sustainable and safe way that consistently happens. So let's take a look at something like dollar CAD. And these are just really simple A to B movements. This is nothing complex, very, very simple. So if we look at dollar CAD, a recent run of taking these trades, very simple on the higher time frame. Weekly chart, we were looking for some sells purely because we had a very key turning point in the market here. So we were at a point in the market in which that we're either going to rally all the way up to this high. If I just zoom out, if I actually go monthly, it will make more sense. We were looking to see if dollar CAD was going to rally all the way up to test these highs again, right, to fill these wicks. Longer term, we may do that. But you can see this gap that we've got in price, right, with this wick here and this major low there. There was a high chance, even with price moving away, that we were going to come back to fill this area before we go long. Now, what you also have to look at is that sometimes there's a message from the market. You have to look at a point in which that, right, your idea is not playing out at this point. This was quite a bit of a move further away. Usually we would move around 50% before we drop and fill that gap. However, we went even further than that. So this was on the weekly chart, essentially the line in the sand, and we were looking for something specific to see whether we can flip our bias to be going long to essentially take advantage of this run to the upside, or the idea is playing out and we're just looking for some specific things on the lower time frames. And what we can see now daily, nice run into momentum. There was a missed trade from last week. Oh, this one was beautiful. This was a very typical AFT entry. So if I just clean this up a little bit, what someone who is a novice would just see this maybe. They might have a level in, right? And they see, okay, this is an area of resistance. So I want to look to sell here. What happens is price breaks through and suddenly they're not looking for the sell anymore. They're looking for the buy, right? They're looking for price to come back and retest that area to maybe go long, right? And sometimes that does work. However, there is something happening here that was really, really important that gave us an edge with this particular trade. Because of this internal structure and this kind of mini double top, the fact that we broke the high and we broke back in impulsively, so we had a strong candle shape formation followed by continuation pattern, that gave us the permission to go lower, granular, and unlock an AFT entry. So when we start to work our way down, we can then look for something like this that is a very obvious and clear structure, even on the 1 hour and on the 15 minute. There's something specific in here on a lower time frame. I'm not going to go into those details yet. This is more of the concept behind it that enables us to be able to get into these trades. So this one was very, very simple one. Top end would have been a bit more, but 17% position, really nice, backed by the higher time frame. Bigger structure is very clear, and then we exit around this area here. Now, we could have squeezed a little bit more, but this is just a simple trade. That's the AFT entry. There was, of course, one a little bit lower down, which would be a standard entry, and it just would have been a slightly bigger stop. So we would have been talking roughly around, I'd say 20. So you still would have walked away with about 10.6. And then we had the third entry, which would have been another standard entry, which still would have been decent. You probably would have had about 33-ish. So you would have walked away. If you got both, another 6. So you still would have walked away with 16 if you got both. Worst case scenario, 6 if you got one. That's just one position. That's still very, very solid on a funded account. If you would have gone top end and you would have gone 17, you might have added the other 6 as well. You'd have been easily over 20% for the day, right? Nice, simple position. Now, this one when it gets a bit more interesting. So as you can see, we break to the downside. We get to these low points here, and this is where you'll usually see a bigger correction, either reversal points or bigger correction. So this is exactly what we would anticipate and forecast to see. And we've played out. And what you can see is some trader might look at this and go, they see a gap here. They see just a bit of mess. And what we're seeing is reference points of, right, if this is an area of value in which that we would likely reverse from, this is our main point. This is our key value area which we would want to sell from to take advantage of that move. However, we also have a clear plan as to what would we need to look for if we get 50% of the move in. And what happens is, within a structure like this, a continuation, what you'll find is from the high to the low, we would roughly move up just over 50%, which is what we can see here, 50% for us to be able to actually get involved in this position. So sometimes we will just move 50% of the range, of this entire range, if you like, in before getting to the top, and then it still drops off. So you need to know then what to look for to be able to warrant, right, this is where I can go with an AFT entry. I'll just go into my one because it's very specific. What you're actually seeing is the same thing we look for on the higher degree, we're looking for on the lower degree. But the key word here is sequence. So you can look at this and you can follow it. But if you don't know the sequence, you'll make lots of mistakes. If you know which sequence to look for, and then you follow that, you'll know which ones to enter and then be able to capitalize. And this is where all of the teaching, the mentoring comes into play. Once you have the guidance, you know the sequence, which we go through, you then know how to do that. All of the AFT content, it's in its own section. Of course, phase 2 is coming out literally over the next few weeks. I'm going to absolutely love it. I can't wait for this to come out, and I've not even gotten into that part yet. It's just going to add so much juice, seriously. However, nice simple position out of this one, and I missed a couple today that I'll go over. But I'm really happy with this trade, right? I could have managed it maybe a bit more aggressive, but it's 7.2. It's not in a long period of time. I never fantasize over how long. I know some people love, especially the gurus online, they love to tell you how this happened in 14 minutes and that they glamorize that. But what about the trades that you've been in for 2 days and it didn't work out, right? Is that then negative on the other side? It doesn't work like that. How long you're in a trade, doesn't matter. However, this one happened to just be a few hours, which is great, but it is what it is. If I have to stay in the whole day, it really doesn't matter. It's the quality of the position that is the most important thing. So this, in isolation, could look confusing to someone as to how would you know to enter there? What else would you look for? It's actually a very important sequence that we look for as to why we would look for this trade. For example, I wouldn't look to sell it here for lots of reasons. But lower down, there was a specific AFT criteria that consistently meets the criteria in the scenario that warranted me to get the trade. So then I've been able to get in, get out of position, 7.2, really nice trade, and we hit decent figures in a very, very safe way. And that's the key part of it. So what you've got to remember is that once you become a master of the basics and you become competent with the Falcon strategy, you're able to execute on these things, and they're so repetitive and so simple to take, and it's so good to see so many of our students adopting this already. Q3 was a really big testing ground. I wanted to make sure everyone knows their stuff, they're getting on with it, but I also knew coming into Q4 people would already be executing on their funded assessments, breaking through, hitting some serious levels. I can only imagine with this phase 2 layer of AFT, what this is going to do for results is going to be ridiculous. You heard it here first. You'll see it for yourself. Just either sit there and watch or get involved. It's entirely up to you. But that was dollar CAD, nice and simple. Let's take a look at dollar yen. So I'll show you why something that could look messy. It's usually those trades that look a bit messy to the untrained eye tend to be the better trades. So if I look at that purely on a daily, it doesn't really look that great of price action, just sideways, choppy, very wicky. But if you understand how price behaves, you'll gain much more clarity. So if I go a little bit lower, I'll give you a few tips here. I actually alluded to something, a very important lesson earlier. I said about the gap on dollar CAD. Look at the gap here. You've got this bullish low test, right? And you've got a clear gap for price to fill, or at least equal to this area. And you've also got these wicks there. So price is usually going to come down and fill that wick area. So if we then go to, let's say, the 1 hour chart and we're looking for this run of price, remember I said the word sequence earlier. Sequence is very important. When we're looking at, let's say, this area to fill and price is hovering around here, there is a very high chance price will fill that area. So therefore that gives us the clue to say, right, any criteria that meets the Falcon strategy as to how we're looking to trade it, we will likely look at this area from a management point of view. It could be a profit target point of view. That's element 1, and then this is element 2. So these are our areas in which that we're looking for. So then when we go granular, we're backed by certain things. Now, there was almost a beautiful AFT entry. This one didn't actually manifest. It was so close. So I want to explain it to you. And the reason why it didn't work out is it actually developed into the same thing, just on a higher degree. But what I would have got involved, you could have maybe got involved in this one, but this one with a 10 pip, target area would have been around here for around, about 17%. It just created a larger degree of that, and you would have been able to get in from here, and there was one in here as well, but this is the better one. So the better one is the one that I've got marked up. So if I just get this on here, because we was retesting that area. So there's something specific that was going on in this area, and the entry was exactly at about 12:30. You could have got involved all the way up until about 1:15. So you had a good 45 minutes to an hour max to still get the entry. It's not like if you weren't there in that 5 minutes or 2 minutes, then you can't get the trade. Some of them are going to literally be there and go, and some of them, they still might hang around for an hour or so. So this one, nice simple one, would have been out of this one for around 5-ish%. So nice simple trade. And as you can see, very simple when it comes to the overall picture as to the thought process. Here's the wick. This will likely be filled. We've got 2 reference points that we would go to before we either create bigger corrections or sellers will be getting out of their positions. So then when we're looking at these areas or these areas, there's a high chance all of this volatility will be filled. So when we're going granular and it satisfies the AFT entry, yes, it may not be super longer term or this one super high time frame, but from a simple range play to fill that area, to fill that wick, suddenly we're in for a treat with a quick 5%. That can't be sniffed at. If you're trading that even just on a 100k funded account, I'm sure you're going to be very happy with that. And that's just a really bog standard simple position, right? That is dollar yen. And last but not least, this is the one that this is my go-to. This is if I was to signature one, and this is going to be of element of phase 2, why this one was so brilliant. And this is the element of what people ask a lot: can I set profit targets? You can. I've never ever said that you can't set profit targets. I don't know why this gets lost in translation. I think there's pros and cons to all of it. If you're more inclined to maybe not be by your screen, or there is an area of value that you want to take profit, just understand what comes with the consequence. If you take profit and you bank 8% and you don't manage it how you could manage it, well, then you have to suffer the consequences that it might run for 18%. And then you can't get upset when that happens. You either stick to one or not at all. Or in certain unique scenarios, if you're going to be flying, you're going to be traveling, you might not be able to manage your trade, you might be at work and you can't manage your trade for 6-7 hours, then I get it, I understand it. So there's not this or the highway. It's really dependent on your situation. So we do have that flexibility. However, let's look at dollar Swiss. This is a very simple range play. You can see all the way from the top, we've been selling off from the top of this range to come back down to this inflection point. So when we've sold off aggressively and we've pulled up to this area, there's a certain AFT entry criteria that got satisfied. As we went lower, we could see, right, we've got 1 hour structure, we have the 15-minute internal, and then you had, oh, this was just stunning. What a position. Could have actually got a bit tighter here, roughly there. I mean, on certain scenarios, what you're going to find, I would never recommend this because I don't think you start needing to go silly, right? Because it just gets a bit reckless, and when slippage comes into play, this need for wanting to just have the tightest stop possible is just unhealthy. It comes from a lot of greed internally. You thinking that, right, if I get this trade, I could have made more. I mean, where's the line? It's a slippery slope. The reality is, your goal is to become what? Full-time trader, fully competent. You want to be confident in life on the charts. You want to trade a decent size account. You want to be making money. When you're making 20, 30 grand a month, 40 grand a month, I can assure you this, you're not bothered about getting the tightest stop loss. You're just not. You want consistency. And if someone said to you, right, you're going to consistently make 30, 40k a month, but you have to have 20 pip stop losses, versus you scrambling around and trying to find these really, really ultra tight stop losses in certain scenarios, you get them, you convince yourself that you're going to do that consistently. But any person with half a brain would just do the maths, and you would see from a 10k account, you would make millions in such a short period of time. And if you're not doing that, you just have to use your brain cell and think, right, why am I not doing that? There's a reason as to why, because you've not factored in sustainability. I'm not saying you can't. Listen, I can enter with a 4 pip or a 5 pip stop loss sometimes, and it's actually relevant, but I don't, because I understand over the long run, sustainability, growing a massive account is far more important than me just catching this 1 or 2 trades where I could technically make 40% in a day. I'm sure some people do it. However, there is a lot of risk that comes to that. You have to also look at how much have you risked to get those positions. Students have shown me before, right? Our students, where they've taken something silly like 115 trades to pass a third-party funded account to make 10%, right? And they've taken so many trades. And they're trying to get in, they're not actually listening, but they're getting in as granular as possible. They're getting in as tight a stop as possible. But if you have to take 50, 60, 70 trades just to bank 10%, then that's not actually good risk. I would argue that's riskier, because you have to take so many trades. You shouldn't have to take that many trades to bank 10%. You just shouldn't, and that's the maths that people are not looking at. The point being is this: there's certain times in which that I could look at it, and even I catch myself doing it. So I understand your perspective. I know where it comes from, but you have to have discipline as to, no matter what, I'm sticking to my rules. This is my rules. This is my discipline, because that's what's going to carry you through for a long trading career, is the point that I'm making. So if we look at this, I could go, I could have really and truly got maybe, call it a 6 pip stop loss in this one, and it still might have worked. What would that have banked me by the time I was out? So 1 hour, if I set it as a profit target, because that would have been the right area to set a profit target, you could have set your profit target for roughly around 12.5%, and it would have been achieved. Really, really nice and simple. However, what I wouldn't have gone lower than is, in this scenario, probably about 10 or 11, right? So you're talking after I would have been out of the trade there. So about 6.4, 6.5%. still is an extra position. Now, the reason why this is literally a go-to clean-cut AFT phase 2 entry, and this is stunning because there's something very specific within this. Some of you might see, oh, that's just a 1, 2, 3. It's not. It's not. There sequence. The word I said, sequence. I want you to really think and ponder on that word as to the quality of the turning points in which price plays out. And it's so black and white, and you'll see it in the content that's coming out as well. Repetitive in the past 7 trades. They're stunning. They really are. So that is a good example of, if your goal is to make returns, we've got that covered, right? If your goal is to have something sustainable, got that covered. You want to scale up on funded account, everything covered, mindset covered, all of it is. It's down to you. It's down to you at the individual. Phase 2 is not going to save you. Even with the new content that's coming out, I'm telling you, if you've got terrible mindset, you could have the best system. You could have phase 2. You could understand how to execute on these trades. You could see something that could bank you 18%. But if you've got a bad mindset, bad attitude, you're still lost. That's just the reality. And no one wants to tell you this, because what they want to ram down your throat is that there is this holy grail. There is a way in which that you can bank all these returns. But the truth is, if you're not competent mentally, or you're just not willing to work on yourself, then it's going to be difficult for you. And I mean that with the deepest compassion, because trading is not an easy thing. Anyone in this space that is going after being a trader, I commend you, because it's not easy. I don't care how you trade, how you look at the markets, not bothered. But if you're doing it, I commend you, because it's a difficult thing for you to do. However, what you cannot avoid is your own mindset, because if you're not doing the work, right, if a student comes to us and they're just not willing to work on their mindset, it's hopeless for them. But if you are, you're moldable, you're willing to work on your mind, willing to sort your routines out, willing to fix your bad habits that are just keeping you in self-sabotage and going around in circles, then you have a fighting chance. You have an opportunity. You can break the norm, because don't let the figures scare you of how many people in trading lose, because that's skewed as well. What you've got to remember is most of these people that call themselves traders are an insult to the industry. These are not traders. These are dabblers. I don't put them in the same category. You may as well put these people in the same category as people that just, bet on accumulators on horses and football, or go into the casino every now and again with no plan, no structure, hoping to win. They're in the same category. It is an insult to all the people that are putting time and effort, investing their money, thousands of hours into their craft, to someone just opens a TradingView account and has got $500 in a broker account to call themselves a trader. They're not. These are uncommitted people. You don't want to associate yourself with those people. To the people that actually put their all in, do weekly advanced self-review, like, these people are literally willing to improve, invest in their mindset, invest into coaching. Like, these people take this seriously, right? They're part of a community, they're part of something, they're properly educated. These people have such a solid chance to succeed. The others that are just dabbling around trying to find free resources, they go nowhere. They'll be here in 5-10 years time doing the same dance. But the serious people, that statistic is more important. And you got to ask yourself, are you a professional? Are you treating this like something that really is going to become your life full time? Or are you still in the back of your mind dabbling in thinking, but what if it doesn't work out? I've got this backup plan. That is holding you back as well. End of year is going to be here before you know it. Q4, historically the most profitable. It's going to build all of the momentum for you for Q1 as well. So get your head in the game, drown out any distractions possible that is going on in your life, get focused, and good things are going to play out for you. I'm looking forward to sharing more about AFT Phase 2 in the coming future. Catch you all in the next episode, guys. Have an incredible weekend.